Welcome traders to our midweek technical analysis. So jumping straight into things here, what I'm going to do, even though I did send in a start of week market analysis, I'm going to go ahead and just go over from the start of the week. So the start of the week being this candlestick here. So we started off the week in a bullish fashion. So obviously, if you remember, before the market opened, price was testing at around this area, and we was looking for price to break structure of this level here and this level here, anticipating that we were going to see the previous all-time high tested at, or a new all-time high created. However, as you can see, price ended up becoming bearish. If I go ahead and grab a path for you, I will just go ahead and mark up the rough move. So you can see that price ended up continuing bearish, with price then beginning a consolidation phase. So this consolidation phase that I'm talking about, I will mark up right here. So indicating this yellow box will indicate the consolidation block that I am talking about. I'll go ahead and reduce the opacity just so you can see a little bit more, and I'll go ahead and put it in white as well. So as you can see, we saw a significant bearish move, with price dropping from around 3,450 to around 3,380, so give or take a 700 pip drop. So a significant bearish move for gold. However, as you can see, price has begun to or began to consolidate. At first, price did create a bearish wedge. So if I go ahead and grab a trend line, you can see that price ended up creating lower highs and lower lows. If I compare this to something that we saw not long ago, you can see that we saw the same thing but in the opposite way. So you can see that we created a higher high, a higher low, higher high, higher low, higher high, higher low, before price then broke structure of the previous higher high, and then continued on bullish. Eventually giving us a break and retest pattern, etc, etc. So what is the difference, just by looking with the naked eye, what is the difference between this consolidation in comparison to this consolidation? Obviously you can see that it is pretty much the opposite. So instead of creating higher highs and higher lows, we are creating lower highs and lower lows. So at the start, this indicated to us that this is just price sort of the volume and volatility slowing down for price, no real big orders coming through, and price was just going to move sideways for a little bit, consistently creating those lower highs and lower lows before price then continued on bearish. However, as you can see now, price has indeed sort of broken out of this bearish wedge. What do I mean by that? I will show you now. So as you can see, obviously we have in fact been creating lower highs and lower lows. But there is an interesting point about this consolidation. So obviously, as you can see here, we had an exhaustion candlestick where price ended up pushing all the way down, coming towards this sort of point of interest here around 3,375. However, the candle exhausted before it closed, finishing price in here. So before if we go ahead and ignore this exhaustion candlestick, you can see that price ended up creating the first lower high, lower low, lower high, lower low, lower high, and then this is where it gets interesting. So from this point onwards, so this area here, it starts to get interesting. So why do I say that? As you can see at the bottom here, if I go ahead and mark this in a different color, matter of fact, we're going to go ahead and mark it in red. So you can see that we have a consistent level of support that we have established. So price is coming down to roughly around the 3,375 level, testing this same area multiple times, indicating to us that we have now broken out of this bearish wedge, and we are just consolidating, and price is moving sideways, awaiting a significant amount of volume or volatility injected into the market, for then the market to make its mind up and decide whether it wants to continue on bullish, surpassing these previous highs, or continue on bearish, eventually coming back down to these levels here. So what does this mean for gold, and what sort of scenarios could we expect to see from now, from the rest of the week, or until next week? So let's go ahead and have a look. So for a bullish move to take place, obviously we're going to be expecting a few confirmations. So the first confirmation would be for price to push past this level of resistance indicated by this trend line. As you know, trend lines don't really have any significant value to technical analysis. However, it can just sort of solidify other confirmations that you have, other technical analysis strategies that you put in place. So the first confirmation that we'd be looking for is this confirmation here. So price to surpass this level of resistance indicated by this trend line. And the second confirmation would be for price to invalidate the previous lower high. So what would that look like? So what we'd see is we'd see price come up, and create a new high but higher than the last, indicating to us that we have definitely and successfully broken through this sort of bearish wedge, bearish consolidation, if you will. So if we see that first confirmation take place where the trend line is broken through, and then we see a break of structure of this previous lower high, we will most likely be in for a bullish move. However, there is one more confirmation that we want to take into account, and obviously price is testing within our higher time frame point of interest with the sort of middle point at around 3,393. And remember, these points of interest, these rectangles, they are not price specific. It is just a rough area in which the market has tested as both a support and resistance multiple times, or a resistance multiple times, or a support multiple times. That is literally all these are. So again, going back to where we were, so we're looking for that first point of interest to be broken through, which is marked by the trend line, and then the second point of interest to be created, which will be the second confirmation to take place, which will be the previous lower high broken through, and then we want to see price move away from this point of interest here. However, there is actually one more point of interest, or one more confirmation that we're going to look for and take into consideration if price moves and breaks out of this consolidation area. So if I go ahead and grab a box, you can see that price, upon this last bullish move, when we started creating these highs, when price did retrace, we saw this level tested as a support a couple times. Once when price went on to create a new high upon the market open for this week, and then a second time when price started to become bearish and then gave us that break of structure, entering us into this consolidation zone. So why is this level important for us? So you can see we had one test of support here, another test of support here, and then we also broke structure, and then we came back up to test it as a resistance, indicating to us that this is a point within the market that we want to take into consideration. And as you can see, it was the first lower high that was created for this initial bearish wedge. So going back to the confirmations and what we're looking for, so we're looking for that first confirmation of the trend line being broken through, the second confirmation of the previous lower high broken through, and then eventually seeing price move away from this grey box indicating our point of interest. Once we see price move past that, we are then looking at this level of around 3,408 ish roughly. It just past this area here, basically past this first lower high that was created, and once we see that, we will then expect price to at least push to 3,435 roughly. So that's what it's going to take for a bullish move. Going into a bearish scenario, so let's go ahead and just delete some of these drawings so we can keep it nice and clean. So a bearish scenario is a lot simpler for it to take place, or to mark up at least. So obviously this is the previous lower high that was created. So what we're looking for is price to come back down to test this common support area at around 3,375, with price eventually breaking through this point of interest here, continuing on bearish, with price eventually, if we see price break through, so obviously the first confirmation will be price coming back down to this area. The second confirmation will be a candlestick finishing in or past this point of interest at 3,375, and then the next level that we will be looking for is around 3,358, give or take. So that's what it's going to take for a bearish scenario to take place. A lot simpler and a lot less confirmations in comparison to the bullish move. However, they are both possible. A continuation of this consolidation is definitely possible as well. However, as you know, the market's the market. No matter what pair you are trading, consolidation will never last forever. So there's two possible scenarios that we could see take place with the confirmations that I have listed for the bullish move and the confirmations for the bearish move. So I feel like that is a good point to leave this midweek technical analysis. So again, concluding it, we're looking for price to break through this trend line, push away past this area of around 3,393, and then price breaking past the last lower high and continuing on to this next level, and see how price sort of reacts at that level. If we see a break of structure of this level, we're definitely or most likely going to see 3,433 around the area touch. Bearish move, we're looking for this support to be broken through. The start of this break could be indicated by a candlestick finishing lower than any of these sort of where you see these long exhausted wicks. And if we see sort of a candlestick finish around this area, we most likely will see that bearish continuation. And if we see that bearish continuation, we're anticipating that price will come down to at least this area here. So again, that's going to be our midweek technical analysis. I hope you have all enjoyed, and I will catch you in the next one.